Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Hello guys, good afternoon. Today is Tuesday, July 27th. I'm going to be talking about today's trades, today's first action, mistakes done today, the things that I did right, and pretty much everything that I think it's worth mentioning about today. We had a pretty bullish day, clearly, and I was able to call only one of the moves that was basically profitable. I took two losses along that win. That will be three losses, sorry, that I will be going through in just a second. For today, I think I actually showed. Do we have a 1 hour area or something? No, we didn't. So, as you can see, the hardest thing to do here, or the hardest thing to know for sure, is the direction of the market. Knowing the direction of the market, we already have pretty much, I'd say, either to say maybe 70%, maybe even more than 70% of what you actually need to get a profitable trade, right? So as you can see, we came from basically mitigating a pretty strong 1 hour area that, what was that? For example, this one will took all of that liquidity and all that we have there, and probably comes from mitigating. I see a small pause there before the break. We could go into detail. Let's actually go, because, why not? So we have the break of this area right here. And the break of that area was caused by this range, pause, call it however you want to. And basically, as you can see, it's actually quite mitigated already. If it's not mitigated to 50, I still, I'd say that I still can use it. It actually does go through it a little bit, so it's not quite a good reaction per se, but well, it kind of does react to that. As you can see, it just continues to, in this case, well, that area worked out great. As an example, you could ask me, how do I spot those areas before they happen? And you actually don't. That's not how this works. What I do is, as an example, I don't think in the 1 hour happened. Yeah, no, in the 1 hour it didn't actually happen, right? As the 1 hour was pretty far, to be honest. But being just on the 1 minute, being on the 5 minute, maybe even, yeah, in the 5 minute, well, actually, pretty far from the area that I thought I was. Okay. 5 minute has a pretty strong structure here that gets broken right away, and well, we got a series of mitigations there, changing to the bullish side. So basically, seeing somewhat of a reaction, seeing somewhat of a flip, or a change in the direction of the market, a change in the order flow. Overall, in most of the trends, that already gives you a little bit of a hint of what could be happening. And if you check why is that happening, well, you could encounter areas like this. And something that I drew today, if I remember correctly, is this structure that we have here. When I have a push like this, basically creating higher highs, high lows in higher time frames, all that I expect from these areas are to maybe cause a reaction, because as an example, this area, well, actually, maybe we could say it was this area that actually caused a reaction there, and then another one here. But that was literally the only area that actually caused a reaction. Maybe this one up here, right? So when I have a structure like this, when we have higher highs, higher lows, higher highs, higher lows, all of that, I expect price at some point to just start pushing lower, right? And maybe it will react to some of this, which could give, as an example, this is a 4 hour market, 4 hour chart. That for us, this movement here could mean a whole day or maybe even 2 days, right? So that for us could be a lot of mini opportunities inside of the 1 minute time frame, sorry, that could lead to a couple of short-term trades that could basically last for a little bit and give us a little bit of profits, and basically then just continue to sell, right? Of course, if we have, as an example, the 4 hour here, as you can see, we have had a huge order block, a huge, sorry, not order block, huge change in trend since the break of this, right? Even though the 4 hour flip, as an example for me, is this one, which is also something that I mentioned. This is my 4 hour flip, right? For me, whenever we break that, I can start looking for sells. Let's say I want to look for sells at this order block. Or as an example, we don't actually get to that order block, but this causes a break, so now I can look for sells here, right? As you can see, that worked out. Then we finally break here. That was caused by by this order block, and basically price comes back to mitigate something within this order block and then continues to fall. We have the break, doesn't actually come back to the extreme. That doesn't really matter. Then we have another break, price comes back, mitigates the extreme, actually goes a little bit further than that, maybe took liquidity or something like that, and then it just continues to go lower, right? We have a small pause here. The price actually, as you can see, respected strongly. But yeah, pretty much, even though for me that's my flip, even though I can start looking for trades after this flip, if I see the break of a structure as strong as this, I feel like we have a very strong change in the direction of the market, and more, of course, if it is in the 4 hour. And the same happens, this thing that I'm talking about here, and all of this that I'm talking about here in the 4 hour happens on the 1 hour, happens in the 15 minutes, happen in the 5 minutes, and in the 1 minute, right? It's just something, the market is fractal, so you basically do what you would do in any time frame, you repeat it on any time frame, and it should work in any time frame, right? So even here we have liquidity, all of this is liquidity, so now I expect price to maybe take that. But well, after such a strong push, we might see some correction to then continue to go higher, so pullback or something like that, right? So that's pretty much it. So as I was saying, this structure, as you can see, price came back, took all of that, and even came back to this. Also something that usually repeats itself a lot. As you can see, we can easily say that this comes from basically reacting at somewhat of a range. So basically, this reacted to that. Maybe this reacted to a pause there. This reacted to the extreme. This one maybe has a pause or somewhat of a thing that it reacted to. Let's actually check. Well, it reacted to the range, right? It reacted to this whole sell to buy range. A sell to buy range is just that, so all of this sell that we have that then buys, this is a sell, we're selling to then buy. This is a range to a sell to buy range because we sell to then buy. This is a sell to buy, although this one doesn't actually break the high or anything, so I don't think it would actually count as a sell to buy. I don't really use that much the sell to buy ranges or buy to sell ranges, so I don't really want to get too much into details because it's not something that I quite handle. But yeah, so we could say that this mitigated somewhat of a range there. Then this whole move comes from mitigating this, which is somewhat of a gap there. This wick down there basically came from rejecting this whole pause or range. Then we have the break of this structure, which is caused by this whole thing. The price basically mitigated there. This whole move comes from mitigating this, and etc, etc, etc. So basically, what I'm trying to show you here is that on this move, on this whole push up, the only area that worked is this one, this extreme, right? We're in the 4 hour, we could say this is our area. The area that is drawn is the 1 hour. But the 4 hour looks pretty good. And as you can see, this is the last area that came from mitigation. Since that point, we do as an example in this one, mitigate that. And then we don't really mitigate much, although we do react to a pause there. Here we react to the whole range, etc. As an example, this extreme that was mitigated, that came from mitigation here, that came from another one, that came from another one, that came from another one, etc., was never mitigated again, right? for, well, this happened on February, so at the beginning of the year, basically, and took, well, it's 5 months to actually get back here, a little bit more than 5 months, right? And 165 days, you do the math. And that's where it reacted to. Now, as an example, when I come back to this structure that we have here, if we react to something, it's most likely that we will do in a short-term way, that we will have somewhat of a pullback, right? Because these moves, basically, even though we're falling, price has to pull back at some point, right? And those areas, the important ones that we have on the push up, whatever they are, as an example here, I would have considered my important areas as this one, this one, this one, this one, and that's pretty much it. Here, this one does cause a reaction. This one causes a very minor reaction. This area, well, it did break the low, so I won't count that one. This whole range did cause a pretty strong reaction that actually lasted 3 to 4 days. And that's pretty much it. And then we'll have that area that I'm not counting for now. So the reaction that we're currently having, if you ask me if we're going to continue to go higher or continue to go lower from some point, of course I can't really say for sure, but I did see liquidity up here. I do think that we are we're in a pullback, that we overall we're going to continue to push lower. But at the same time, we do come from a pretty strong bullish trend, right? So all of this at the same time, you can either count this as a complex pullback and then continuation to the upside, which could pretty much be. Or if we break this low, even though it's not that important, if we break that low, we could be looking at somewhat of a major pullback, maybe to 50% of the whole move or something like that. Basically to then continue to see a somewhat of a bullish continuation. But for now, we are pushing higher after tapping an area. We have been bullish for 7 days basically, as we're in July 27th, and the tap was on July 20. Imagine grabbing a trade there. I do think we had the opportunity to take a trade down there. Of course, we went for 5 hours, something like that. Yeah, we're talking about probably 1,000 pips or something like that now. Well, not 1,000 pips, 300, but a few hundred. So, what do I expect at the very least that we break these highs? That is the very little that I expect for price to do, is to break these highs. Now, the things that could easily happen is, as an example, I do see that this order block here was mitigated by this wick. If we go back to this and check the 15-minute time frame, probably do have somewhat of an order block, which we do, and that 15-minute order block could be pretty important for price now, as it counts for mitigation. That mitigation comes from another mitigation, so we mitigated this, then we went down, we mitigated this, we went down, and now we mitigated it again, right? So looks like a pretty important area, but at the same time, all of those continuous mitigations on areas can lead to price basically creating liquidity there and pretty much just causing a price basically giving reasons for price to go higher, take that liquidity and then push lower, or we'll just continue to go higher, you know. So we still do have some good confidence to consider that we could be going for a longer term bullish move, right? I want to check in 1 minute what areas do we have here. So we have the extreme and this other one. I like much better the extreme, not gonna lie. The other one doesn't look that good, and it does look like a liquidity. Let's see if price has reacted to anything just yet. Well, it kind of reacted in the middle of them. So basically, a full range is basically being respected. Yeah, not to take a risk entry or anything like that. But as you can see, for now, it is reacting to it. I'll leave it drawn, as I do think it's an important area. If we break that, well, we will see more buys, of course. And yeah, okay, let's get to price action of today. Today's price action feels a little bit laggy for some reason. Okay, that works better. I think. So I woke up at 6:50, 6:40, something like that, basically with this trade. I think it was 6:45. So when we're pushing lower here, I realized that here we had caused a flip. Here we could have caused a somewhat of an important break. I wouldn't call it a major break as it's not a major structure, but we later caused this. This major break here causes a change in the trend of the 5 minute time frame here. So that's already a lot. Having a 5 minute change in trend or flip basically, it's not the same as having a flip on the 1 minute. The 1 minute is very insignificant comparing to the 5 minute. When we're talking about structure, of course, entry wise, you might find some more precise or preciser, I think it's more precise type of entries. So yeah, basically when we break that high, then we have something important. So even though we haven't caused this flip just yet, at this point when we have a flip, we have to check where did that happen. And if we look to the left, we do have a range that happened before a major break, right? Pretty good range, in my opinion. Pretty clean highs, pretty clean lows. When I mean clean highs, it's literally that. Highs together, lows together, which is not the greatest thing because it is liquidity. But I decided to basically consider it anyways, as I was not actually taking an entry or anything on it. So what we see later is this. So I have a break here. This pause that, as you can see, works. It's like the thing that I was talking about the other day, which sometimes the extreme is pretty low, so price actually generates a pause, a range, or something before it continuates. And price wants to come back to mitigate something, it mitigates that range, that pause, and then continues to go in the direction, right? It doesn't go all the way down to the extreme in some cases. And well, this was one of those cases, right? So we have the flip. We could consider this a break. So at that point, this could be our entry, right? At the same time, we'll later see that we caused this major break that we have. This area at the same time did take a lot of liquidity, half the liquidity all above this area that was taken by this order block. So that's a pretty good confluence to maybe take a sell. Price kind of was reacting to this. So 50% of that range, which is a range before... I don't think we can actually say it broke this, right? Because it happened way too low and we had a lot of structure after this basically range. So I wouldn't call it so much of an important break or anything like that. Range, sorry, not break. So yeah, for now, we're not going to consider that as an area, but we do have to keep in mind that, well, it kind of did react to a bearish area, so it's something to just keep in mind. So what happens next? We have this mitigation, we have that mitigation. After basically this, this mitigation that we cause this major break. Then we have the major flip, we could call it. Basically the flip in the 5-minute time frame, which is very important. We do have a flip, we do have a major break. So this is a pretty strong opportunity to the downside. When I was looking at this, I think it was 640 actually, because I did see when this was basically created. I didn't even consider this as a potential trade at any point until it actually was maybe on this second candle, and I thought, well, maybe this could be somewhat of an opportunity as it is a pause before a major break, and we still have to go even lower, right? Because we haven't mitigated entirely the area, in my opinion. So we do have some reasons to continue to push lower, and yeah, pretty much it. Also, the reaction wasn't that clean if we consider this as our area, right? So yeah, pretty much it. We reacted to that, worked out amazingly. In a few minutes we had the take profit. And then we have, when you have such a strong area, right, you come from a very strong area, you have already one reaction, you have caused major breaks, major flips, you can be a little bit more aggressive on your basically areas. So as an example, for me, I identified that as a flip, and I said, well, this is the pause. I would never go for an order block like that, an extreme order block like that. It just doesn't make sense at all for me. Again, this same structure, the extreme is too far, right? So price comes back just to the pause and then continues to go higher, right? It's the exact same structure than that what we have here, but it's just a smaller version, right? Because it's literally that you have, how did I draw it? So you have the flip of that, and it's the exact same thing. You have the flip of this. It just takes a little bit more. If you see it, you can compare it. Can we move it? That's a pause. Price comes back, mitigates the pause, continues to go higher, right? It's the exact same thing. It just happened in a smaller version, right? To be honest, I just didn't take this trade. You can't really ask me why, but I just didn't take this trade. So yeah, let's continue to see what happens. This was my first stop loss of the day. Price was basically mitigating this range. I didn't entirely love the structure for either way. I did see this as a flip, this as a break, so I basically went for that. I realized late about the flip, otherwise I would have gone for this, something like that, which might would have given me a break even at the very least. I don't know if I take profit because the area with this week it's pretty much pretty big basically. So yeah, I went for that. This EM price just went straight right through. I was looking for a buy later on this area. So you can see same structure, flip there. Basically expecting this to work out again. But price in this case just does this, which we'll actually see in just a second, which is something pretty common when price has a pretty long impulse. You'll see that it will just retrace a little, won't react to any other areas, and then continue to go in the direction they basically started. So this is my second loss, which was a little bit of a dumb loss, not gonna lie. And it's just this pause before this basically somewhat of a major break, right? I think I have my confluences to go for that, but at the same time, it doesn't make that much sense, to be honest. As you can see, this is the exact same structure here. Again, price basically breaks, doesn't come back to mitigate anything unless we actually consider this as something, which it could be. Don't get me wrong. If we go to the 15-second time frame, we might see something. Yep, 15-second pause, reacts to the 50% of that. We have basically this flip was caused by that, right? This major flip, well, not major flip, but major break. That was caused by that pause, right? So what we can't see in the 1 minute, in the 15-second looks amazing. And right there you have a reason why I actually reacted to that, right? So, oops, where was it? So it was literally that pause. The last 15 seconds of this candle was just that 15-second candle pausing for price to then, well, basically come back, react to, and continue to go higher. It does go lower later, you know, but yeah, pretty much. So, okay, I'm trying to remember because I forgot, not forgot, but basically deleted the areas that I basically took losses on. On this whole movement, if you ask me where I could have bought here, this is the enemy pattern 1, the stairs. It's the exact same thing as always, just starts to behave in stairs, finally breaks the area, and the cause to that break will never work, right? In this case, it went for the extreme, right? So you can see, actually, I've seen it a lot going for the extreme. So at some point, if I continue to see that this is what actually happens when you have that type of pattern, then I'll basically start to go for the extreme, you know, and fuck it, right? So in this case, when I have a move like this, that it's just very correctively to one direction or the other, I usually go for the extreme, but, well, not usually, but when I actually go for these trades, I go for the extreme because nothing else actually makes sense, right? So if you actually want to take a buy here because you think it's a good area, it's better to just go for something extreme. So your stop loss is below that area, meaning that if you actually but if that trade fails, that means that the whole area was wrong and not just the area that you chose, right? Because if you go for this, then maybe that entry was wrong, right? Because in this case, that's exactly what happens. It breaks the area that it chose, reacts to the extreme, and then continues to go higher, right? So, yeah, I'm starting to see a lot of price just coming back to the extreme, honestly. So I will see if I do something about that. Then we have this major break. Price comes back and mitigated that. At the same time, it's exact to this trade that we'll see in just a second. We have this major push down. I decided to take a sell here, which basically worked out for a few minutes. I managed to get out and a break even. If you remember correctly, I had a DCE there, a CE there, sorry. That was basically drawn. I actually did place the trade, but I didn't have the courage to actually go for it, which is basically why I ended up deleting the trade just before, well, when price was somewhere around here. I said, you know what, I'm already at taking the risk on this trade. I don't really want to continue to risk even more. Then what happens is basically price reacts to nowhere again. We cause a flip, we cause a break, so a pretty strong move. We don't really leave much liquidity as I would hope we did. We do have somewhat of equal lows there, but it's just not that strong. We have a low there, but it's just not that strong. Have another area there, still not strong. But I just really wanted to go for that trade, to be honest. If I went for a trade as stupid as that one, I said, well, might as well, just go for this one. And it's pretty much exactly the same thing as this. As you can see, we have just a strong push, and price just retraces and starts to push higher. When we break, we have a break and a flip, and price comes back to that area, and that's basically this, So yeah, I mean, this doesn't actually react to anything unless we actually do count that, right? That 15-second time frame candle. And on this side, maybe in the 15-second of that, we have something, or maybe in the 5 seconds, who knows. And we do have a pause there, but I actually went for the gap that we have there. This is market inefficiency. A gap there. Price usually when there's a gap like this or like this one, even here, look at that. Basically, price came back up and mitigated that gap that we had. Same with this gap there. Let me see a gap that looks cleaner. This gap got filled. We might see something clean here. No, not gonna get into that. It's not something that I really use. But well, as an example, in this case, it reacted well to the pip, cover that that basically inefficiency, and just continue to go higher. Of course, again, not things you would actually trade, not trades you would actually take. It's just fun things to see, to be honest, concepts that end up working out. So this is the winning trade of the day. I thought about continuing to trade after basically as soon as this trade closed. I thought about this area, but to be honest, I like this one better. So if I was to trade this, I would have gone for this one. And as you can see in this case, well, I would have missed that trade as price basically reacted to the 25% of this area. And if I would have traded this, I think I would have been mitigated. I can't really say for sure. But yeah, not gonna lie, a good trade. As you can see, this trade actually went a lot further than the 5R. Went all the way up to a 1 to a 25 basically. But yeah, it's okay. To be honest, I had a 1 hour order block, so as an example, I could have aimed above that high, expecting price to basically break that high, which would have been a couple of extra hours. But it just doesn't make that much sense for me. If I'm, as an example, this is a 1 hour order block, and I have a 1 hour order block here, and I see that I've taken into a good trade, I might move my take profit to that other order block, expecting somewhat of a ping pong scenario, where if price reaches this area, this order block up here, I will look for a sell, as this is somewhat, I'm just counted this as a retracement, right? This order block that I have here is just a zone that price reacts for a short term to basically cause a retracement on the higher trend per se. And yeah, but in this case, the order block was literally, we were inside of the order block, if I remember correctly. I deleted it, so I can't really check. But yeah. And this structure, the third loss that I took was this one. No, sorry, this one. Oh, but actually this was a break even. So I took this trade because we reacted to an area and we caused a flip, right? I took this sell right here. Where did we react to though? Because I do remember seeing it and saying, oh yeah, well, it's a pretty strong area. Was it the one? Yeah. So it basically reacted to this, right? So this is what I saw that it reacted to. That had taken all of that liquidity, so it made sense. At the same time, it's just a little bit of a risky trade. Not gonna lie. It's just literally a reaction. Small reaction causes a small flip, sure. And then, as you can see, it doesn't work out that much. At the end, it does. If we would have taken a sell, respecting the high of the order block, well, where it of the structure that we just saw, which was somewhere around this area, that would have not been broken. So you can see the trade would have been respected, but yeah, it's not quite something that I do. So if I remember correctly, I actually took a break even on that one because I ended up moving my stop loss when we broke this low, and I moved it to this, right? Yeah, I can't reset for sure. I could check, but to be honest, I just don't really want to open the MetaTrader. So pretty much, if I remember correctly, I got away only with a 0.25% profit, as I only took one take profit and supposedly 3 losses. Maybe I messed up with one of the lot sizes, which made me believe that I took 3 losses and just one take profit. But yeah, I can't really say for sure. Between yesterday and today, we had some clean opportunities, in my opinion, which I just failed to identify in time, right? And well, as an example, yesterday, I really hate this. I really hate looking back at it, but it helps, to be honest. Such clean trades that happen just like that. Flip after tapping an area, the pause works. Break after reacting, after this, basically after so we mitigated that, we pause. And well, kind of the structure that we were talking about just a few minutes ago, you have extreme, the extreme is too far, creates a pause, breaks, comes back to mitigate the pause, and then continues to go higher. But what I was basically trying to say is such clean trades. This one, I got to take it. I think I left home somewhere around here and came back somewhere around here, right? So I started to analyze the trade and basically got here. Well, that was a good trade, not gonna lie. I would have liked to take it on the thing here, because that would have actually allowed me to get a 1 to a 10, which I probably would have not gone for. Yeah, pretty much. Then we didn't have much clean opportunities through the rest of the day, as we had a huge push up. And today, well, it's pretty much the same, I missed out on 2 really clean opportunities early in the day. If I would have taken those 2, I'm pretty confident that I would have not traded for the rest of the day. It's not that necessary to continue to trade. If I would have seen something really clean, which would have been something... Yeah, I don't think there was something clean enough for me to take another trade. I don't think I would have identified this as clean because it's a risky trade. I don't know if I said it. It's a risky trade. We don't really have that much confidence. It's just an area that it is pro trend, pro higher time frame trend, because we come from a pretty strong bullish trend, right? So that is a pretty strong confluence, but at the same time not where it's situated, not the area where it is. It did take liquidity, which is a something, right? But yeah, it's just not that much of a clean. So I think I would have taken those 2 and just out, a 2.5% as soon as you start the day. It just gets you enough of adrenaline to get through the day. So that's pretty much all that I wanted to talk about. I talked a little bit about concepts. I left on Telegram a link with a feedback type of system where you guys can send me through a Google Forms ideas and basically things that you want me to improve or to change or to add. So make sure to do that. I placed the name to be mandatory to be placed. And I basically forgot to say through the Telegram that it's not necessary that you put your name or anything like that. It's just put a name. It could be your username, could be just blah blah or something like that. It's not necessary. As an example, I don't use my name. I said I'm Nomad Capital, and but yeah, pretty much. So I hope you enjoyed. I hope you take something from this video, and yeah, I'll be coming back soon with way better results for sure. See you soon, guys.